Hello, Oracles. We got earnings on Wednesday, and in typical Tesla fashion, we beat earnings and we got a massive sell off afterwards. So we'll get into all of that, some discussions as to why, but I'm not upset by it. You guys know I don't mind. Long term, this is awesome. We're just getting some buying opportunities. I'll give you guys a few minutes to get on. We'll jump into the charts, take a look at a few things. But yeah, it's you know, down, what was it, 9% yesterday? Let me see. Um, yeah, big drop, but we got a nice gap down yesterday. So gaps fill up and down. So we now have a gap that goes up to 280. So that means that we're most likely, obviously, long-term investors, we know we're going to fill that gap at some point. It's just a matter of when. So having that gap up there to 280 is a nice thing. We've got a gap above us to fill. So for me, when I'm going to look at those gaps above us, that's going to tell me the upside. So right now we have an upside of about $20. And if we end up dropping further, just remember that. That just means there's even more upside. So the lower we go, the better opportunity you're going to have and to get a better return on your money. What's going on, Dominic? So yeah, very excited. I did pick up some TSLY. And for me, I didn't change my strategy for TSLA. It's still $15 a day, but because the price came down, I'm getting more bang for my buck. It's like buying my favorite thing on sale. What's going on, Lang? So that's the thing that I try to encourage people to understand, especially as long-term investors, to keep your emotions out. And it's like, if you were going to buy something that you really, really loved and somebody said, hey, it's on sale, you'd be excited because now you can buy more for less, or, just get what you wanted for less. Here we are getting that exact thing. I understand it's slightly different because it's also an investment, and some people are on the other side. They're wanting to be able to have that go up in value because it's going to be their retirement plan or whatever it's going to be. So I get it, but unfortunately, the macro environment we are in is not going to allow that for a long stretch of time. It's going to be uncertain. So that's kind of where we're at, unfortunately, for the moment. But for those of us who are still waiting 5+ years, this is great opportunities. Cassidy, I'm in the Philippines for vacation and couldn't catch a break, still buying the dip on my vacation. That's awesome. Like, what better vacation can you have? Going to the Philippines and just sitting there buying Tesla stock. That's phenomenal. I'm very jealous. Oscar, the minimum shares that you would hold a Tesla for the next 10 years. So minimum shares for me, I want to get myself to 4,444 shares. 4 is my lucky number, so 4 fours would be great. That's just the number I'm going for. That doesn't mean a dollar amount for me. I just want that number of shares. So based upon my price target in 10 years, what is my price target? I'll pop it up for you guys here to see. Let's see, where are my price targets? I actually got to update my price target spreadsheet because I have it on my valuation model, but I don't think I put it into. Oh, I did update it. Okay. I'll share this for you guys. I don't mind sharing. All of my members and patrons got this already, so I'll make this public for you guys to see. There we go. So there we are. So 10 years, 33.13. So if we do some quick math on that, 44.44 times 33.13 would give me, that's a lot of money. Give me $14.7 million. So if everything pans out the way I have it planned right now, based upon my price targets, 4,444 shares will get me $14 million. So I am totally okay with that. Now, I don't know if I'm going to get 4,444 shares before the next split. So we shall see how that goes. But yes. Let's see here. What's going on, Raymond? Poor Tesla. What's going on, Karav? Hey, Sith Lord. Yeah, stay strong. This again is not anything negative as far as I'm concerned. We saw with earnings, and again, as I said it before, when it comes to earnings, it's all about the fundamentals. We saw awesome fundamental stuff. We understand what's going on. Wall Street doesn't grasp it. And there have been some discussions about Elon saying some certain things, as Gary Black pointed out, if Elon didn't talk about, AI and the things that they're not currently doing and focused more on the things that they are currently doing, we may have had a different reaction. But quite honestly, that's not how Elon talks. Elon speaks 3 to 5 years in the future. It's how he does. That's what he does. That's what he's always done. He is constantly thinking that far ahead. And as far as I'm concerned, that's awesome, because we are still going to see the stock price going up in that time frame. And what he's talking about is what we are investing in down the road when Wall Street isn't seeing it yet. They're not factoring it in. There's no dollar amount that they can put into their valuation model based upon what Elon speaks about. So they can't value it. But we as investors from the retail side of things can say, hey, I think this is going to happen. I think this is the value that's going to get put on it. So we will invest accordingly. And if Wall Street wants to pull the stock price down for us to buy, just gives us a better opportunity. What's going on, Jack? And so that's as far as I'm concerned, that's where we're at. And I'm totally good with this. And I did add my TSLY positions. Again, not to the TSLA. I'm still waiting on that one. If we dip under 200, I know it seems like a far way away and we're never going to get there. But if that happens, I'll increase my my daily allotment to $20. If we go under 150, I'll do 25. If we dip down below 125, I'll do 30. But at those levels there, I've got a lot of cash on the sidelines, and I'm going to start throwing in bigger chunks of cash at those levels as well, if that ends up happening. So let's take a quick look at the charts here. Where did I put? There it is. Make this bigger for you guys. There we go. So again, looking at the charts here, and I'm trying to get rid of all these. These are kind of, it's good information, but it's a bit much, and it kind of really makes the chart messy. But again, we have this gap up here to 280.93. So again, basically a $21 upward movement that we can go from where we're currently at right now at 260. So down another 1% today, fell big yesterday. Volume was higher. So seeing a red day with high volume isn't always the greatest thing. Again, I'm not concerned. Doesn't bother me whatsoever. So got that gap. Definitely broke the upward trend that we were on. So now we just kind of watch it from here. And then next week we have the FOMC meeting. RSI and the daily were down in 48 again. So definitely fell far down from the overbought range. So the question is, do we continue to fall to go to oversold like we've been following that pattern or not? But yeah, so again, we've got this gap down here to 235. So the gap below us right now is 235. The gap above us is 280.93. We'll see which one fills first. What's going on, Moose? Could you do a deep dive video on TSLY? I actually did one, and it's not super deep. I have learned some more since then, but it's still pretty new. If you want to take a look at that video, it is in my playlists. You could check that out. Just look up TSLY Oracle, should come up. So I will go deeper into it. There's a bunch of other people who have some other ones, but I got some information from them. So I may do another one. I'm actually looking at having Darth Dividend on here, another YouTube guy, very big into dividends, obviously, and he's very big on TSLY. So sometime in August, I'm going to be reaching out to him. So perhaps what I'll end up doing, instead of doing another deep dive video, is I'll have him on here, and then you guys can ask him all those questions as well, because I'm going to have some questions myself. He knows more about it than I do, so I would like to ask him also. What's going on, Digital? Phil McMahon, the longer the consolidation period between 100 and 300 per share, the better for long-term investors who had in increments. Absolutely. It's dollar cost averaging. We're in a sideways, despite how many ups and downs we've had and how wild it's been swinging. We are trading sideways technically, between 100 and 300. So we just continue to trade sideways. Sideways trading is great for TSLY. So that's another big reason why I want to be in there. Oh, you guys can't do TSLY in the UK? Oh, that stinks. I'm sorry. Hi, Tim. David Trainer, an analyst from New Constructs Investments at Tesla worth $26. Oh my God, I saw that. If I can find the tweet on that, I will bring it up. But yeah, dude, $26. And he was talking about the the Cybertruck pricing was going to be like $160,000. I'm like, are you insane? Especially with what Elon said about, the Ford being, too expensive itself. Yeah, 160 grand. You're nuts. I don't think so. Now, granted, some of the people who are first on the waiting list would pay that, but there's no way the pricing is going to be that high. Let me see. What else did I want to sugar? I wanted to do something else. Maybe I'll bring up Twitter here quickly, and I'll see if I could find that. Go into here. Oh, there it is. Yeah, here. I'll break this out for you guys to see. Share. Yep. Elon Musk's Tesla is worth $26 a share, analyst says, one of the most overvalued stocks in the market. David Traynor, CEO of investment research firm New Constructs, argues that Tesla's stock price is significantly overvalued, estimating its worth at just $26 a share, which is roughly a tenth of the EV giant's Thursday closing price. Shares of Tesla stock plunged over 9% following mixed second quarter results, leading to a debate among Wall Street analysts about the company's valuation. Tesla's second quarter earnings confirm our view that the stock is one of the most overvalued ones in the market. Now, keeping in mind that what we had seen during earnings was energy going up significantly, 40% quarter over quarter. We saw margins for energy going up to 18.4%. We knew and expected that we were going to be hitting this trough when it came to operating margins, which we were lower than I thought. I thought we were going to hit 10.9%. We came in at 9.6%. Totally fine. And then we saw vehicle margins. I said 17.5. We came in at 17.5% for margins. So vehicle margins, and that's most likely going to be the lowest. Now, they did talk about Q3, and Q3 with having them having lower production just because of the fact that they're going to have some downtime for maintenance and upgrades. Didn't specify upgrades. We can speculate that it's Highland. Who knows? But the fact that they also put in Q3 that one-time upgrade where people can transfer their FSD into a new vehicle. It is brilliant, and it's going to help them with deliveries in Q3. So what's going to end up happening is people who want to carry over their FSD, some people may be paid, $8,000 for it, maybe a much lower price than the $15,000 it is now, but they've got like hardware too. So they can now transfer that $8,000 FSD into their new vehicle with hardware 3 or potentially hardware 4 to be able to get themselves into a new vehicle without having to pay for FSD again. It's a brilliant move by Tesla for this Q3 move, and I think that's going to help with deliveries. So let's go back to it here. Reasons for bearish outlook. Trainer's bearish outlook is based on several factors, including falling demand, deteriorating margins, and a massive cash burn. All right, so falling demand is it's not pointing out the true facts as to what's going on. There is an entire automotive market pullback when it comes to the demand strictly because of the interest rates going up. It is industry-wide, no questions. So it's not falling demand. And on top of it, the demand is still going up. When you see quarter over quarter growth, that means demand is going up. Deteriorating margins. We knew this. They came down on prices because interest rates are going up and there's less people going out there to buy because they're having to pay more for their vehicle because of interest rates. So yeah, they had to bring down margins intentionally because prices are too high because of interest rates. Massive cash burn. Well, yeah, they also told us that because they're investing in the business, which we all want them to do. The Cybertruck, Dojo, AI, all of that stuff, Mexico, their energy business, they're investing their money in that. So yeah, they're burning cash to invest. Elon has proven that he is one of the best cash allocators of anyone out there. And here he is doing it. And now all of a sudden it's a problem. Yeah, no thanks. He also criticizes the over-reliance on Tesla's full self-driving business and EV charging network for the company's valuation, as these segments are not currently materially contributing to the bottom line. So the charging network, I'm not concerned about. It's not like that's going to contribute a lot to the bottom line, at least not right now. But it will make an impact in the future. And yeah, full self-driving. That's what Elon sees as the future. Like everybody has already acknowledged it. Everybody in the automotive business has acknowledged that full autonomy is going to be the future. So, yeah. So, they're not relying on this. It's one of those things where, in Elon's eyes, if they do not do it, they're going to not succeed at the level that they think that they're going to succeed at. Let me see. The bull case. Despite trainers' warnings, Tesla has its share of bulls. Wedbush's top tech analyst Dan Ives sees Tesla's Q2 earnings positively, arguing that the company's gross margins are stabilizing and that it is full self-driving AI technology and EV charging network will boost profits in the future. See, two sides of the coin here. That's just how it goes. So, yeah. Yeah, did Gordon Johnson change his name? Like, he's so funny. I saw that and I was like, I think Gordon Johnson's price target's actually higher than this guy's. It's nuts. We do have some storms going through here, guys. So if for some reason I lose you, may just be because the storms took out my internet or power. So I apologize on that. How much Tesla shares do you have? Do you have it in Roth IRA or just regular brokerage? I have it in both. Roth IRA is, or any tax-free account, is significantly better because you don't have to pay the taxes on it. Just keep it rolling. I don't plan on leaving it in there for a long term. I'm kind of monitoring it, even in my IRA. Some people do say that to hold it long term. It hasn't been around long enough for me to determine whether I'm going to do that or not yet. Based upon the knowledge I have with it, it's going to be holding onto it till I see the market actually hit a bottom for real, or until I see the economy finally get to a stabilized point where we can go back into a true bull market and not have these violent swings up and down. At that point, then I'll take some of the money out of TSLY, but I'm going to also monitor what we see for the dividend returns on it. Because if we're still getting good dividend returns, what's the point? But as Gort and I had taken a look at in the first half of this year, Tesla going up as much as it did, we would have made more money and had a better return on our Tesla investment, or TSLL, which would have been even better than we would have had with the dividends from TSLY, plus the gains that we had on that also. So lots of different things to pay attention to, and I can at least monitor on a monthly basis because that is how it pays out, as monthly. So we'll see on a monthly basis. So I do have it in my IRA, but I do have it in my regular account also because I do want to use that right now to kind of generate a lot more cash for my main portfolio to be able to generate more cash in the future and be able to invest more into TSLA also. So that's my strategy currently, not financial advice, but that's what I'm doing currently. Let's see. Nicholas, 3 weeks until shocking July CPI and upcoming Jackson Hole Powell. Oh yeah, I forgot the Jackson Hole. That's a great point, Nicholas. I forgot about Jackson Hole because of reinflation in energy and commodities, as well as the elimination of month-over-month base effects for inflation in July. Great points. All of that is great. So yes, we have seen energy costs going up a little bit, so inflation might bump going into August to reflect what we see here now in July. So again, FOMC meeting is next week. So we had the rebalancing of the NASDAQ 100 finishing up today. It's part of why we saw the violent swings. I made a tweet about it this morning. So that's kind of why we had seen that going on. So a little rebalancing. Next week, we have the FOMC meeting. Most likely they're going up 25 basis points. That's my guess. So they do that. We could see a little bit of the market pullback, and then we don't have another FOMC meeting until September. So with all of that going on, we're going to have CPI and PPI coming out. We're going to have jobs, a lot of data and info coming in August in a lower volume month. So brace yourself for August. It could be a bit uncertain. Abby, Elon, please stay away from earnings calls. You have proved you don't care to do it. So I actually had a good discussion with someone on Twitter about this. My personal feeling is I don't care. I like when Elon does what he does, but I fully understand that other people don't. So from that aspect, Elon goes out there and, for those of you who have been listening to earnings calls for the last few years, you've seen how Elon has grown. He's not as bad as he used to be. He used to be just like not caring at all about what he said. And it was kind of a train wreck of an earnings call. So it has definitely gotten better. And I don't want to say he's saying things to cater to Wall Street, because that's not who Elon is, but he's at least doing things in a more professional and clean manner. So I've seen the progress, but Elon's going to be Elon. And it's not that Elon doesn't care. I don't think he minds being on there. It's just that Elon does what he does, and he's excited about growing the business. That's what he's talking about. But when it comes to an earnings call, that's not why Wall Street's listening to it. And so that's where there's a big disconnect. So I totally understand where you're coming from, Abby. But my personal feeling is, as a retail investor, I like it. And I think Elon, when he goes on these calls, is he's speaking to a lot of the retail investors more like myself, which is why I appreciate it. But then there's other people who don't. So I understand both sides of the coin. Yeah, the next month is going to be a bit uncertain. Yesterday, Tesla TSLY yesterday dipped down to the low. Actually, today was like low $16-ish mark. So I bought some at market open. I bought more. I put limit buys in for $17, $16, and $15. So I put 5 shares in for 17, which triggered. I've got 5 more shares at 16. I've got 10 more at $15. And then I'm just going to monitor it and add from there as well. And I've got alerts put in just to see where it's going to end up fluctuating to. Because again, when it comes to the dividends, sure, I think it's going to be awesome. But if you dump all of your money in right now, and let's say we pull back to $12, the dividends will be great, but it's really just offsetting the losses you've taken in the value of that ETF. So that's why I'm dollar cost averaging into it little by little, because I do anticipate that bit of a pullback. Yep, FOMC is Wednesday next week. So Tuesday, Wednesday. So Tuesday is the beginning of the meeting. They all discuss things. And then on Wednesday, they finish up the meeting. Jerome Powell comes out at 2:30 p.m. Eastern time, and he will discuss what the rate hikes are going to be and what the Fed decision is. Then they will have, or 2 o'clock it comes out, and then 2:30 he goes on to do the whole, that thing. It's Friday. I'm sorry. It's my first full week of work in a while. But he comes out and does his press conference. That's what it is. I love that Elon does the earnings calls and brings the price down. Seriously, like it's so funny because no matter what Elon says on the calls, when he opens his mouth, it's just a sell off. That's it. It's ridiculous. Yep. Guess we're buying on Tesla dips next week. Goodbye on your Tesla TSLY. I keep forgetting to buy TSLY. Yeah. TSLY. And again, do your own research. I've had, negative sides of things too. So you got to be careful because, if all of a sudden these guys aren't doing, because it's all based on options, if they don't do well on their options, your dividend payout's not going to be great. And if the stock price pulls down significantly, you can have a pretty poor month. You could lose value in the ETF and not bring in a good dividend to offset that. So there's risk to everything. And when it comes to something like this, could be potentially more risk, but there's also a potential for more reward. Tim, where Cybertruck will be produced only in Shanghai or other factories? No, Cybertruck is Austin right now, Austin only. I don't know if they're going to be doing it in Shanghai. As of right now, it is Austin only. So that is the only factory. And I think what's going to happen is once they get that production line up and running smoothly, then they'll probably take a look at putting up a second line in Austin. And then after that, maybe over in Shanghai, they'll put one up. I don't know. I haven't heard any rumors whatsoever about Shanghai Cybertruck production, but I wouldn't rule it out. Let me see. There was some other stuff on Twitter I wanted to share with you guys too. Let me get into it. Where's mine? Twitter's been great. What Elon's doing there, again, all of the crap he got last year for it, I am very pleased with the progress we have seen with Twitter and the information we can get from it. Yep, here it is. Here's let me pop it up on the screen for you guys. Yep, Open Skies. I retweeted this one. Just a reminder, Tesla Energy is growing at 40% annual rate, an advantage that no other auto company has, and still to be understood by the market. So again, energy. What other automotive company is doing energy? None of them. So Tesla has energy. Eventually, we're going to see energy surpass Tesla's EV revenue, which is hilarious because that means it's also going to be surpassing legacy autos revenue. So Tesla is going to end up having an energy business that's going to be bringing in more revenue than we see from legacy autos automotive revenue. And then again, margins were up 18.4%. So 18.4% margins when last quarter they were at 11%. Yep. And then this one here. So this is what was going on today and why we saw such wild swings. U.S. markets will be on high alert today as out-of-cycle rebalance on the NASDAQ 100 collides with some $2.4 trillion of options contracts tied to stocks and indices, which are scheduled to mature. With equities mired in a summer lull, the events are expected to spur violent price swings. There may be fireworks. So we saw some of it today. It wasn't crazy today. Yesterday was obviously the bigger sell-off, but that was the wildness that we had seen, and again could be happening some more. Again, just knowing next week what's going on. I just bought now at 256.87. Was your next buying dip range? I'll set up while I'm on vacation. Time here is the opposite. I like to play gaps. Gort and I play the gaps, so I'm not adding extra at that gap, just because I still think I think we have a bit further to come down. But if you like to play some dips like that, check the gap at 235. So like maybe like a 240. I think we're gonna fill the gap, but I like to go a little bit above it. So maybe like a 236, 237, just like the 146 gap. We came down to 150 and bounced off of that and never filled the 146 gap. Not to say we won't do it in the future, but as of right now, maybe we come down to the 240 level, don't fill the 235 gap, and then bounce up from there. That's possible also. GM has some energy play trying to emulate Tesla. Good luck with that. Good luck. Yeah, I mean, that's great. As far as I'm concerned, when it comes to converting the world over to renewable, sustainable energy, I think that's great. The more people who come in to the field, the better. So I think that's awesome. But if they're not going to do a good job of it and they're going to put a sour taste in people's mouths, then no, thank you. So hopefully GM comes through, and that would be great. I'm all for it. Nicholas, Tesla will hit low 100s again. Apple will crash to 110s, and Nvidia, no comment whatsoever. See, and Nicholas, I know people don't like to hear it, but I'm on board with you there. And yeah, exactly. Tom doesn't think so. So, and there's two different camps. Hey, maybe we don't come down to those levels. Nobody knows the true future. I'm just looking at all these dominoes that are lined up to fall. The housing market, interest rates still going up. We've got a lot of companies that still have yet to go bankrupt, which will end up happening. Plenty of zombie companies out there. Employment rate is still doing well. So we're going to see unemployment going up. We also see the student loans are going to come back into effect here in the US in October. And credit card debt is getting extremely scary right now. Eventually what's going to happen is people are going to hit their credit limits. They won't be able to have this credit to spend money on because right now the spending is there. So we saw pretty good spending in retail in June. That's a lot on credit cards. So people are going to get wise to this. So please be careful out there with your credit cards because we're getting into a tough time where companies could be going under, companies could be really tightening their belt, and companies could be letting people go. You have high credit card debt and you lose your job, it's going to get really ugly really fast for a lot of people. Then all of a sudden they get to a point where maybe they own a house or they're renting, they can't afford the rent. They have to then move out. They can't afford their mortgage. They get foreclosed on. Now the landlords who are trying to get this rent from these people, they don't have people coming in to rent because people can't afford their places. Maybe rents come down, or landlords end up having to sell their homes because they can't afford to pay the mortgage either because they were banking on their tenants paying the mortgage and they can't find tenants. There's a lot built up right now. And I don't want to say it's a house of cards, but there's a lot of dominoes that still have left yet to fall, and that could cause a massive market pullback. Whereas Nicholas said, we could see Tesla hit the low 100s. Apple could pull way down. I mean, when I had my Apple, I bought it at 119, sold it at 160, pushing up very strong right now. But in the past, we have seen when the Fed pauses, which basically we're kind of at a pause right now, the market runs to all-time highs. Nearly every single day, I'm watching the S&P hit 52-week highs. we're not that far off from hitting all-time highs. Actually, if you guys know, last I knew we were about 7% off from all-time highs in the S&P. However, we've gone up significantly since then because that was last week. So we might only be like 5% away, maybe 4% away from all-time highs when it comes to the S&P. So if we are going to be pushing up to that point, that has been an indicator of we hit all-time highs, push past that, something happens in the economy, we see a massive pull down, and then the Fed ends up pivoting. The Fed doesn't plan on pivoting until next year. So probably Q1 or Q2 of next year, we're going to see that happen. So we might see a downward slide happening before that, and then the Fed will pivot to try and counteract some of that. That's what I'm seeing going on in the future, and it does not feel like it right now at all. I get it. I get that it doesn't feel like it because we've been on such a nice run. But think about what we saw through COVID. We saw a really, really nice run going through COVID, and then we bottomed out. We came down and crashed down to $100. So just hold on. And even Elon is saying it, because if Tesla felt like we had hit the bottom, they would have done a buyback, but they invested a lot of the money into the business instead. Now we're moving forward. So perhaps we're looking for maybe a Q3 or Q4 buyback announcement coming, because at that point we could be seeing the pullback. Poor Bold, if TSLY moving downward but continuously giving good dividends, then is a sign of danger. In this situation, TSLY company can be wiped out anytime from the market. Yes, that is another risk as well. So what they do is they balance between puts and calls. So they have synthetic shares. They don't actually own shares of Tesla. They do it synthetically. So they kind of like protect themselves on both ends. So they're playing both sides of the coin to be able to get this and get all of these again, losing my train of thought. All of my brain is completely gone. But they're all the premiums. So they're getting all these premiums coming in from playing both sides of this, and they're all doing everything in the money. So it's really not super risky. They do 3 to 6 month option plays on these. So like last month, we saw $1.06 per share, but those were contracts that they had from 3 to 6 months prior. So we could still see a few good months of this going on. So again, yes, in a downward, if we're coming downward, they're paying good dividends. Just remember, it could be a 3 to 6 month lag on that based upon the contracts and premiums that they were getting over that time frame. So just pay attention to that as well. But if it's coming down and paying good dividends, it's really, in my opinion, if it's trading sideways, that is the absolute best scenario. If it's coming down and they're paying good dividends, I don't think it's going to go under, but definitely be careful. And again, that's why I'm not dumping all my money into it, because that is one of the risks. Is it comes down to a point where they no longer have the liquidity in their account to be able to float. Last I knew, and let me see if it's any different now, they had $50 million. Let me see if that is, let me see, total assets. Oh, so they're up to $267 million of total assets right now. So, I mean, it's a good chunk of money. So I highly doubt it would go away, but you never know. You never know. So definitely something, yes, to be cautious of. Let me see. Could we see Tesla bounce back to 290 next week? Not to say we can't, but again, the FOMC meeting, I think next week it would be all dependent on the macro environment. And because of the fact that we saw the massive pullback and no rebound no rebound today. We saw the huge pullback yesterday with post earnings, but we didn't see the rebound. Sometimes you get an earnings that, does look really good. It pulls back, but then when you get the rebound and it kind of comes right back to where it was the next day, we did not see that. So right now there is more of a negative sentiment in Tesla, and we may not see that change until the end of this quarter. So we might not see that change until October. So just something to pay attention to. So it's not to say we can't bounce back to 290, but it's going to take some good sentiment turnaround from Tesla itself and a good macro environment, which next week will determine that. When war in Ukraine ends, stock market will soar up. At this point, I don't even know. I don't know how much Ukraine is actually playing a role in this. It's right now, it's like COVID. Anybody who watches the media, especially here in the US, it's like, oh, what's the next shiny object? It's like, all right, it's not like COVID went away, although it basically did, but it just magically is gone, and who cares about it anymore? And when we were in just massive panic mode previously. And then we've got, Ukraine, the war over there, which, yeah, it's still going on, but do we really see much about it? Meh, not really. So it's like, I don't know how much that war is actually playing as big of a role. Um, yep, Ford cut their prices on the Ford F-150, and price was and recession coming, shares going lower, and people cutting spending and spending money on food and drinks. Yeah, that's it. I mean, we're looking at, and Ford said that they did cut the prices because of the cost of goods and because of economies of scale. So, good for Ford and coming down on the prices, and we'll see the exact same thing with them that we saw with Tesla, and Tesla, I think, does that better than anyone else. So that's I don't know if it's going to be a recession thing, but yeah, there's so many things coming, and some people are saying that there isn't going to be a recession. Jim Cramer came out and said, "Oh, yeah, I don't think there's going to be a recession," which almost guarantees there will be a recession. But yeah, that's we'll see how the year plays on. I'm still at the point where I'm protecting myself. I'm taking some risks, just because you never know. That's why I'm still adding every day, but it's still, we're not in a certain place yet. I'm not comfortable putting all of my money into the market quite yet. So like this week, I had um or last Friday and Monday, I had two of my CDs expire. So one of them was 7,000. So I took 2,000 off the plate there. So I re-rolled 5,000 over. Monday was 4,000. So I put another 1,000 into that. So it's another 5,000 I rolled over into next month. But then I kept $1,000 aside for TSLY, TSLA, any other dividend ETFs I may want to get into. So that's what I saved that money for, is for dollar cost averaging into these things. So that's currently my plan. Thanks for taking up my question. Not a problem, man. You guys ask whatever you want. I will answer whatever I possibly can. I try to get to every single one of your comments in here. Obviously, as long as it's appropriate. But I will get to everybody's comment as much as I can. Good insights on the macro environment, Tim. Thank you. Kudos to you. Not many understand the dangers of the Fed pivoting and cutting out of the wrong reasons. Yeah. Stay safe out there with calls, guys. Yeah. Margin, like Elon cannot reiterate enough. Be careful with margin. Right now, it's expensive. And even Elon did say on the earnings call that if we're in a good, healthy economy, going into a little bit of margin actually is not a bad idea. It gives you an opportunity to build even faster. So it's not a bad idea to do that, but right now is not the time to do that. Like Elon knows and sees a lot more than we can see. So the way I look at it is based upon my knowledge, I see these things. Elon sees a lot more and he has the same viewpoint. So what else is Elon seeing that I don't see that can reinforce my thesis? That's why I don't follow people blindly, but if he's saying things like this and I know he knows more information, I take that pretty seriously. What do you think about KLIP and BITO? Which would you feel is more sustainable? So I did buy KLIP. Darth Dividend, I think it was Darth Dividend, went over KLIP. And I was like, you know what? Let me take a look at that. So I picked up some of that. I don't have a lot. I think I have 20 shares of it right now, just because I wanted to feel it out and see how it was going. But I do not know about BITO. I will take a look at that. Actually, I got charts. Let's see what we got. BITO. 1595. I'll pop it up on the screen for you guys to see also. Not that one. Do this one. Oops. So BITO, it's at 1595 right now. Dividends. Dividends are nice on this one too. 49%, 50%. Yeah. All right. All right. Paying out 797. When is that X date on that? 7/3. So that tells me that VA3, and it's inception date. So it's a couple years old. So it's got some leg behind it. Huh. Oh, okay. So it's a Bitcoin strategy ETF. Wow. That's quite interesting. I might dabble in that one. Thank you. Thank you for pointing that one out there. I'm going to put that on my list, and might just pick a little bit of that up. Again, I don't mind diversifying into things, and I will certainly try that. Thank you. But KLIP is also up there as well. And again, I don't know how long, as mentioned before, the risks on these, yeah, like we could see the massive bottom come out of these. People take their money out entirely, and these whole entire ETFs just collapse and they're gone, and you lose all of your money. And whatever dividends you got mean absolutely nothing. That is a potential. So that's why I want to caution you guys and be careful. Um, make sure you're comfortable doing the risk for yourself. But it's not like they're going to do a 1 month collapse. That's why I'm kind of paying attention and saying, if I see things kind of like getting negative and not looking good, I may start pulling some money out just to protect myself. But I will obviously keep you guys up to date on what I'm doing there and what I see. Michael Anthony, TSLA going much lower by PE and still cutting prices. That to me is kind of the concern I see market wide. Very much like we saw significant PE compression happening last year, especially in all of the NASDAQ plays, anything that's high growth. That is potentially going to be happening again later this year or beginning of next year. That is something I'm potentially seeing. So right now with Tesla, I mean, looking at the PE ratio on Tesla, it is, let's see. So Tesla's PE at the moment, wait, why is this? Oh, helps if I look at the right one. So 76, 74 is where we're at. About 75 for the PE. Now, thinking about where we were previously, we were down around like 40. So if we come back down to 40, let's just to make math easy, let's split this in half, taking us down to 130. If you split that PE ratio in half, you bring the stock price down in half, you're down to 130. Now, obviously, that's just total rough math on what I just did here based upon this. Didn't do it the true way that you're supposed to by doing the math and multiplying the earnings and everything in the EPS. But 130, guess what happens at 130? We fill that 146 gap. Guess what happens? The market typically at that point overreacts also. So that means a 114 gap could possibly getting filled, and maybe we test that $100 range again. Just the potential scenarios that I'm seeing out there. Should we give any importance to the high PE ratio of 67 with the actually price of 260? Yeah. So again, that's basically what I was just discussing is, PE ratio. And again, when it comes to valuation models, it's why it's very difficult because everybody could have the same exact numbers, but the PE ratio is based upon what you think the stock is going to do as far as growth goes in the future. And when you start looking at that, and I may say, hey, I think Tesla should be at an 80. So, hey, the stock price should be higher than it is right now. Other people will come out and say, hey, that should be valued much more like an automotive company, and it should be an 8. And that would bring down the stock price significantly. So, just like, Ding Dong said, $26 stock price. If you bring that PE ratio down to a 7 or an 8, that's a 10, dropping it down by 10 times, that's $26. So where he's coming up with this, it's based upon his PE ratio. So, but the PE ratio isn't so much based upon math, it's based upon what you think the future of the company is going to be doing. 147 before or after Q3 earnings? After. I don't think we're gonna. Now I could be wrong, but I don't think we're going to see us pull down to those levels before Q3 earnings. But again, if we have negative sentiment rolling through Q3, if we've got the macro environment starting to get kind of skittish, again, the market is forward looking 6 months. So if the market is thinking that we're going to be pulling back by December or beginning of next year, they may start pulling it back now. So it's possible, but I don't think so. My price target for the end of this year is still 275 because I don't think we're going to see that happen until early next year, but I think it's around that time frame. Just ride the inverse Kramer investment, always works out. So true. But unfortunately, Kramer just came out and said that he, based upon what he heard on the Tesla earnings call, he's still bullish on it long term. So Stupid Kramer. He also said that about Netflix also. Yep. Keep some cash on the sides in CD. Yep. So for me, I'm going to be holding $25,000 in my CDs and continuing to roll those over. Because if the Fed goes up on interest rates, I'll get even more. Right now, I'm getting 5.2% returns. Obviously, nothing compared to the TSLY returns, but I know I will not be losing any value in them whatsoever. So I will continue to hold $25,000 and roll that. And then as I grow my portfolio with all of the dividends, I will just continue to use that money to roll in. So I'm just going to protect myself at the 25 grand and roll it from there. So the way I look at it is worst case scenario, absolute worst case. Let's say my entire portfolio goes to zero. If it goes to zero, that means that the stock market has hit a super low point, and then I could take that $25,000 and put it back into the market, and that will then turn around and be a nice safe kind of safety net for me. Just to be clear, when is the last day you can buy TSLY in order to get the dividend? Then can you sell after you get paid and buy back for the next month's dividend payment? Yes. So the X date for next month is August 4th. So you want to do T+2. So just to make sure that it actually settles into your portfolio, you buy it 2 days ahead of time, which would be August 2nd. So if you do it then, you can purchase it. Once you pass that X date, so as long as you own it by August 4th, come August 5th, but I think August 5th is a Saturday because I think August 4th is a Friday. But the next trading day after the 4th, you can go ahead and sell it. You can sell all of it. You're still going to get paid those dividends. So a strategy you could use if you've got the time and you want to take the risk, you can line up some of these dividends we were just talking about. They have different X dates. If you do the math on a calendar and time it outright, you can probably do 6, 7, 8, 9, maybe dividend rollovers where you can get dividend, take the same money you've got, roll it from one dividend to the next, to the next, to the next, get dividends on all of them and continue rolling that into the next month. Of course, timing is going to play a big role into this. Are you going to lose any values on this? Doing the 30-day wash rule on it, you want to be careful with as well. Lots of different things that are going to go into it. But if you want to play that game, you certainly can, and you can make some good money. Because if, let's say, you're going to, plan it out where you're going to make $1,000 in dividend returns from TSLY, you take that money, then you roll it into KLIP. Maybe you make $500 there. Run it into BITO. Run it and make another $500 there. Then you run it into another one. Maybe you make another $300. Cool. Now it's back for TSLY. Roll it back into that. You've made yourself, $2,300 with the same money. But again, you have to be careful because if you lost value in it, maybe you didn't make that much. Lots of different scenarios, but it's a potential. BLK and SMCI are strong the last few days. What are those? I do not know those. BlackRock, yeah. BlackRock is strong. Yeah. BlackRock's going to be fine. BlackRock owns pretty much, they control a lot. So it's expensive, but here you go. There's BlackRock there. You can certainly get into that, but it's expensive. SMCI, Super Microcomputer. Yep, that one's rolling strong too. But they have a couple of big gaps down below also. This is sort of like the Nvidia gap down here, basically the same time frame. So rolling strong, but seeing all of these gaps in all of these tech companies and high growth companies is giving me that unsettled feeling in my stomach about this being a true bull run. A lot of people think it is, but I gotta say, seeing all of this information is really kind of leading me to believe that it's not going to be the true bull run and we're going to get another big pullback. Apple is at $3 trillion market cap, but revenue is down 4% year on year. Yep, exactly. Net profit as well. Do you guys see the disconnection to reality? Bingo. And NVIDIA's earnings call will be better than Netflix. Yeah. So that's the whole thing is these companies, again, they see what's coming up. So they're doing everything they can to bring in as much cash as possible so that they can park it and wait to be able to weather the storm. They all think a storm is coming and they're all preparing for it. So that's what I'm doing. I'm preparing for a storm. That's big money's doing that. If we're seeing these tech giants doing that, if Tesla is doing that, it would behoove me to do the same. So I'm doing the same. And again, worst case scenario is we don't get that storm. We get through this without a big problem. and I just got some cash on the side. So, hey, I'll just buy in a little bit higher. It is what it is. But I would much rather be on that side of the coin than have everything invested, have the entire market come crashing down, and have nothing to take advantage of that opportunity. Yep, there we go. TSLY in my Roth has been awesome. Yeah, it's phenomenal. I actually just started doing a $5 weekly buy for my son on his. So I have a public um, account for him, and I just put $5 in every single week for him into that. We'll see how it goes. Again, I'm just going to monitor it every month and see how it's doing. But if I can start rolling some dividends in for him, I'll do it. I even increased my mine to $5 a day in Robinhood. So I'm doing, instead of $3, I'm doing $5 a day into TSLY. I think we have a good my 6 to 12 month time frame. I'm not sure how long that 6 to 12 months is going to last or what's going to happen. I know I've been saying that for months, but as far as I'm concerned, that is the time frame I'm looking at of holding TSLY, because once we do hit that bottom, I'll see how the dividends are, but I may start pulling that money out and putting it into TSLA or TSLL to try and really magnify my returns. What is your price prediction for Tesla in 2025? Well, let me see. I'll bring it back up. I had my price targets up earlier. I'll pop it up on the screen again for you guys. Base case. There we go. 2025 is $628. And my reasons for that, again, that's pretty darn good growth from here. I think we have to get through the macro uncertainty. I think it's going to be a big one. And then once we get through that, we've got Cybertruck obviously going to be ramping up. Energy really starting to take off. I mean, it has been, but I think it's going to get much bigger. I thought revenue was going to be much higher than it was, but despite the fact that revenue was actually lower than last quarter, margins went up significantly. To me, that's much more important. So that's going to be a huge game changer. I mean, energy margins were higher than vehicle margins. So there we go. And don't forget, FSD. So I think in 2024, we start to see FSD getting, we'll say, solved. Version 12 will most likely be out. We'll start hearing the regulation talks going on. We know that Tesla is in talks with at least one OEM already. So we'll see more of that happening. Mexico is going to end up coming online. Then we start producing the compact car, the Model 2, in 2025. So that news will start to be bullish. We'll get more information on that. I think that's going to start driving that stock price up significantly. And that's why in 2026, I start to see even bigger jumps. And I think 2026 to 2027 is when we're going to see that next split. Because I don't think they're going to let that price get too much higher, up to $1,000. And again, looking at the timing of it, if we've got Mexico coming online at the end of 2024, the employee stock purchase plan, this is still a decent price for them to buy at. Now this is starting to get questionable at the 628 mark, because they're like, oh, well, we want employees to get in, but we're also going to have India online. We're going to have India. We're going to have Mexico. So we're going to have sort of like we saw before with Berlin and Austin being online, and a lot of employees with a higher stock price not being able to take advantage of it. Here we are in 2026 pushing those levels. We've got 2 new factories online at least. That doesn't even include Lathrop or Shanghai, which are coming online next year for energy. These employees are going to want to take advantage of that. So, hey, same exact reasoning as last time. We wanted to bring the stock price down so our employees could take advantage of the employee stock purchase plan. Boom, here comes that stock split. We probably do a 4-to-1, brings it down to $250. Bang, we're back down to these levels. Rinse, repeat. Let's see. Michael Anthony, you're just throwing out ticker symbols all over the place. I'll go into some of them. GM is the best of all of them with all of the models they have. CSX is a railroad, which shipments tells the USA we're heading for a recession in food. See, there are signals out there in a lot of other areas too. Yeah, GM to me, not the best. So my take on it is same as many here. More is not better, because the more models you have, the less efficient you're going to be. And GM doing what GM was successful with in the past is not going to be the case in the future. because they can't do it efficiently. You can't hit the same economies of scale that Tesla is hitting as quickly as they are when you have so many different models coming out all at once. You can't get that same rhythm down to produce that many vehicles that quickly without having even more massive capital expenditure and not getting the same return, especially considering that they are saying that they're not going to be profitable on EVs till 2030. What's the point in having 25 different models coming out that you're not going to be profitable on? Just make 2 that you will be profitable on. So that's my take on GM and a reason why they're going to struggle significantly. Plus, they have to cannibalize themselves and their own business in order to bring EVs out just to survive. So that's my take. Now you talk about AMBP here. So like I said, I'll go into everybody's questions here. Let me take a look at AMBP's charts. I do not know what AMBP is. So we'll take a look. AMBP. Metal packaging. Oh yeah, you're talking about the cans on this one. $3.74. Pretty, I mean, that's a very sideways trader right there. Doesn't really move much at all, but if they're paying dividends, I mean, hey, so one of the strategies, and again, this is something we're going to go over with Darth dividends. Oops. So like, I mean, looking at the stock itself, being around since, 2020, really, that's it. So it's been around since 2020. It's just been coming down. Yeah, it pays out dividends and it's been trading sideways lately, but I don't know. I don't know about that one. I'd have to do more research on that, much more than I'm doing right now to convince me to get in and purchase that one personally. No, wow, look at me not even sharing it with you guys. Hold on, I'll bring that back up. I apologize. Oh man, I don't have a split screen anymore like I used to. I do it all on one screen. So yeah, so this is the whole entire chart coming down. And again, paying decent dividends. Yeah, so it pays 10 cents, CSX pays 11. So again, not saying that's bad, but the entire value of the stock itself continually coming down over time just erodes away at any of the dividends that you're getting paid out. So is there actually a return on it? That's just my take. And again, brief look at it, I can't say for sure, but that's just kind of what I'm seeing. Now let me see. And then CSX, we'll take a quick look at that one. So, all right, that one has been climbing. So that one would be more of a valid play in my opinion. Let me pop that on the screen for you as well. So yeah, I mean, this one's a little pricier at $32. So the thing here is, if it's paying 11 cents per share on $32, is that really going to be a good return? We saw a massive gap down here. So, maybe it goes back up, to fill this gap, totally possible. But, and looking at it, it's getting pretty low. So if it does hit this oversold range, could be a time to buy because then you can get some returns on the value and equity gains on it plus the dividends. So one of the strategies that, Darth Dividend was talking about was you take the dividends you get from TSLY and you put that into like a Bank of America or some sort of a semi-growth play with dividends. So if you do that, that's more of a stable growth because the expense fees on TSLY are extremely high. It's 99 cents. That's really high, 0.99%. So, or sorry, 0.99%. That's really high. So not to say it's, that could cost you some good chunk of change over time. So if you're going to be taking that money, putting it into a more of a growth play that also pays dividends, that's the money you want to retire on. Retiring on a TSLY dividend, not as realistic as like a Bank of America dividend. So, and there's a lot of other companies out there that are growth or bank plays that you can get dividend returns on. But that's just his take on it. And I agree with him. And again, I'm going to be trying to have him on here next month to go a lot deeper into dividends and the strategies behind it for those of you who are interested, because I know I am, because that's one of the ways I'm looking forward to having cash flow generation in the future is coming in from dividends. Right now, I'm getting a lot from CD interest as well. But as the Fed comes down on the rates, so will the rates for the CD returns. So I'm going to want to be putting that money elsewhere also. But as the Fed comes down on the rates, the market should be going back up. So it's like as the rates come down, I take my money out of the CDs and I start putting it back into the market and just kind of flow it that way. Um, what else we got? Oh, here we go. Lang, what is the number on your second column? Your spreadsheet just shown. Oh, I'll pop that back up. So that is how many shares you would need to become a Teslanaire. And I am going to put in here on the third column. Somebody had asked me to put in what the market cap would be. So I will put that in here and I'll make it market cap. So I'll do the math on that and figure out the market cap for all of that as well, because that was a request and it makes a lot of sense to do that. So yeah, so these are the shares needed to become a Teslanaire is what this column is. So if we hit 275 by the end of this year, if you've got 3,637 shares, you're a Teslanaire. All right. What else we got going on? I'll jump over to Twitter quick. It's been an hour, but I'll still hang out with you guys for a little longer. Let's see if there's anything new and fresh happening on Twitter. Jen. Yep. Peggy. If you guys don't follow Peggy, please do. Peggy's awesome. Cybertruck windshield wipers. That's hilarious. I love how people are still making fun of that. Here we go. Gary Black. Hold on. Look at me not sharing my screen again. Man. I apologize, guys. Let's do this. All right, much better. And I'll get me off the screen so it's easier to see. Beautiful. All right, so this is not the first time Elon has said that Tesla was in discussions with an OEM about licensing Tesla FSD or Autopilot somewhere. On the 2020 Q4 earnings call, Elon made the same claim. This could be a huge positive increment to Tesla valuation, or it could be nothing. Now, he did say it was a major OEM. So, he keeps on saying that they're open to it. So good thing that Gary went back and saw this, talking about it in the past, because this is not the first time. But, knowing that they are in talks with a major OEM, it's nice to see. And again, this tells me that they're confident that it's coming. So if Tesla can make it happen, the potential is significant. Let's see. What else do we have here? And these are all good ones. So these are all the people I follow. If you guys are on Twitter, Farzad's awesome. I've had him on the channel. I'm going to try to get him on here again as well. Penny 2X, love Penny. Penny is phenomenal. Gort, one of my favorites. Gort and I chat all the time about his lines and where he sees the stock going and stuff. News. Tesla has launched 84-month financing in the US. That's very interesting. While I am not a huge fan of paying a car for that long, that might be a great option for me to get into a vehicle. And again, you're looking at the APR here. You know what? Let me do this really quick. Nope. Let's do. So let me see what it would be, and we can see the rates on it. Oh, that's a new website too. Nice. I like the new layout. So let me see if I'm going to buy my Model Y. Let's go through this and we'll take a look at what it could look like for me. So I'm going to order now. $7,500 tax credit, eligible buyers. And again, that comes off at the time of purchase next year. So I'm going to take advantage of that. So I want the long range. And the gray, the color that I was going to get, is now the standard, which is awesome. So I don't have to worry about paying extra for it. Getting the regular Gemini wheels. Contemplated the tow hitch, but I'll pass on that at the moment. And we'll do it without FSD right now, just so we can see. And we'll just go with everything just stock as is. So if we're going to go with a loan, let's customize these payments. So 84-month at 6.39%. So obviously, the shorter the term you go, the lower it's going to be. Although 36 months is 5.89, 48, 5.89. So actually, it looks like it stays the same. But when you go to 84 months, it does pick up when it goes to the interest rate. But your payments are going to come down significantly. So looking at the payments here, we're looking at, this is estimated loan, the loan after savings. I don't go by that entirely, but if I was going to go with a 72, which is what we currently had, 785 a month versus 703. So I mean, you're saving $80 a month by going to an 84 month, but you're also paying higher percentage for a longer period of time. So the loan amount is going to be higher. But looking at my down payment, is going to be much more than that. So my car trade-in, I'll just factor that in. Let's say that's $4,500 plus a $10,000. So let's say it's $15,000. And my credit rating is going to be top tier credit rating. So, with this, and if I do get it next year with the money off the top, $386 a month, that's very, very doable. Very doable. I mean, my car that I'm currently driving now, I was paying $450 a month. So this would be less than what I'm currently paying. So very interesting. Very, very interesting. Yeah. And seeing as where my car is at right now, still runs, still functions fine, but the AC I think might be going on it, and I really don't want to dump a significant chunk of cash into it, knowing I'm going to be trading this in. So I know I've been saying it for 2 years now, but I think next year is the year. I think next year is the year I'm going to be getting it. I want to buy a house first. I think I'll have an opportunity to do that and be able to buy a Tesla. Hoping Tesla pays dividends in the 2030s so I don't have to sell any in the future. Then I can be left to the kids. That's my hopes too. I think it'll happen. I think if Tesla can run their plans as they want to, once they get to the point where thinking about 2030, what are they going to have for real massive growth CapEx spending for EVs? They won't. They'll basically be at the point that they want to be, and it'll just be slow incremental growth after that. Energy will continue growing from there. So they'll want to invest some more money into that to continue growing it. But, Elon already spoke about having many factories for energy around the world. So between now and 2030, they'll have probably most of those built as well. And they're going to just continue pumping out the mega packs as needed. Then at that point, FSD will be done. Robotaxis will be out there. So as of right now, who knows if they're going to come up with anything else? As of right now, it's just Optimus. Optimus would be the next big thing for expenses. But if that's going to be the last big thing that they have for expenses, they're going to have that already in the works, but they're going to have massive revenue coming in from FSD, EVs, and energy. So they're going to have a ton of extra cash coming in. And if he thinks that they're going to be worth more than Apple and Saudi Aramco combined, think about how much cash flow Apple has coming in, and they're paying dividends. Makes sense that by then, Tesla will be paying dividends as well. Elon initially said he didn't want to do it, but he has then since said that they would do it. So that's kind of what I'm looking forward to as well. So I just want to accumulate as many shares as possible. Doing quick math on it, let's say, what is Apple paying per share? I'm going to quickly look at that. I'm curious. Let's see, AAPL. So Apple currently pays 96 cents per share. So let's round it to $1. Let's see if Tesla's paying $1 per share come the 2030s, and I have my goal of 4,444 shares, that's $4,400 a month coming in from dividends just from Tesla itself. That doesn't even include, how much the value has gone up and how much I would be positive on that as well from my gains. So that's just my rough math, and that's obviously all speculation. But if that ends up panning out that way, I will be very happy. The Prius is silent if you keep it under 5 miles an hour. My sister has a Prius. She has the hybrid version. I do like her car. It's quiet. It's not bad. I wanted to get one here, but she lives in San Diego, so driving it there, they don't have the snow, and I really wanted 4-wheel drive or all-wheel drive here, so that's why I got my Honda CR-V. Oh, man. All right, folks, I'm going to let you guys go. We've been on for a little over an hour. It's been a long week, and I haven't had sleep, and I got a lot to do this weekend. So I'm going to try to get a video out tomorrow if I can. Again, I'm super busy. If I can't get one out, I apologize. If not, I will see you guys on Monday. But otherwise, thank you guys as always for being awesome. You are the best. Have yourselves a great